Hello and welcome to the lesson Getting Money for Business. By the end of this lesson, you will understand the concept of funding and ways to acquire money for your business. You will also be able to describe the basics of financials of any business, explain the concept of funding, list the various sources of funding. To begin with, let us look at a situation that highlights the need for funds when starting a business. Meet Sia, a first-year Bachelor of Science student. One day, on her way to college, she comes across an advertisement about a soap-making class in her locality. Out of curiosity, she attends the class on the designated date. She enjoys the class thoroughly and also likes the idea of creating homemade soaps with unique scents, designs and shapes. Being a science student, Sia has a scientific outlook. She uses information on the internet to improvise her soaps to add medicinal qualities to them. Now Sia wants to start her own business of homemade soaps. Initially, Sia promotes her soaps to her friends, family and neighbors. As a result, she gets some orders. Now she needs some initial capital to buy the raw material to start the production. Further, she would need packaging material to deliver the soaps to her customers. She borrows money from her parents to start the production of soaps. Her customers like her products and place further orders with her. Sia's business is now growing through word of mouth. To help her with the growing business, Sia asks two of her friends, Jay and Rita, to join her. While Jay starts handling advertising and deliveries to customers, Rita begins helping Sia in soap production. Fortunately, Sia's business has started to grow and she plans to expand it further. To get some guidance for expansion, Sia gets in touch with Mr. Summer Joy, a finance professor from the commerce stream in her college. Professor Summer guides her on the financial side of her business. The discussion with Professor Summer was rewarding. Sia got basic understanding about finances needed for an entrepreneur. Sia learnt about the basics of accounting like credit, debit, borrowing money, repaying debt, budget, and cash flow statement. Credit. It means to receive funds regularly over a period of time or just one time on the promise to return the amount later, added with interest or a charge. Debit. It means to withdraw some amount from an account. It is an expense incurred by a person or a company. Borrowing money. This means to receive a lump sum with the promise to return with interest. The amount borrowed is called debt. Repaying debt. It is the process of paying off the basic amount or debt that a person or a company may have borrowed. It does not include payment of interest. Budget. It refers to a detailed plan that outlines the spending strategy of a company. The process of creating a budget is called budgeting. Cash flow statement. Also called statement of cash flows. It provides combined data for all cash inflows a company receives and all cash outflows done by the company during a given period. She also learnt about different types of funding. These include angel investment, bootstrapping, crowdfunding, venture capital, funding from business incubators or accelerators, bank loans, microfinance through NBFC, non-banking financial services. Further, Sia got an insight on the statements required to get approval for funding. These statements include a startup budget that includes the initial financial plan designed by a startup to begin its operations, a startup costs worksheet that refers to the financial statement that gives an idea of the initial cost of a business, projected profit and loss statement which is prepared to determine the expected future sales, purchase, expenditure and income of a business, projected balance sheet to reflect expected earnings or losses of a business, sources and uses of fund statement which shows the changes in a company's financial standing over a period of time. Professor Summer explained about angel investment to Sia. Angel investment is a deal between a well-to-do investor called an angel investor and a startup organization. In return to the investment, The startup provides convertible debt or ownership equity to the investor. The number of angel investors has significantly gone up in the last 30 years. The next concept they discussed was bootstrapping. Bootstrapping is to start a business with internal cash flow. It does not involve any capital or external help. The startup has to set aside a small amount of money for bootstrapping. When you use crowdfunding to start a business, you raise small amounts of money from a large number of people. These people may include friends, family, customers, and individual investors. This kind of funding is done typically using the internet, via social media or crowdfunding platforms. As a startup company having a potential to grow, you need some financial investment. There are various wealthy investors in the market who like to invest their money in such a business. They may see a long-term growth in such a business and provide capital, known as venture capital. Such investors are known as venture capitalists. Another way for a startup to get funding is from business incubators or accelerators. As the name suggests, accelerators speed up the growth of a company by providing financial help. On the other hand, incubators provide funds with focus on improvement of the business. Bank loans are the most common method of loan money for businesses. Banks provide loan as medium or long-term funding with a predetermined rate of interest as well as schedule an amount of repayments. Microfinance through NBFC, non-banking financial services, is another way for startups to get funding. An NBFC is a financial institution that provides banking services without actually being a bank. NBFCs deal in providing loans and advances to small businesses. Let us now look at what we learned from Sia's experience of starting and running a business.